Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, August 26th, 6:56 a.m. as I'm starting the video. Quick look at futures. Not a lot going on. Equity is down about 0.5%. Oil up 1%. Nat gas up 1.5%. Really, right now, the market's going to be waiting on some of those inflation figures that come out at 8:30, and also we got University of Michigan consumer sentiment at 10 o'clock, and at the same time JPOW is going to start his speech at Jackson Hole at 10 o'clock as well. So those may be market moving type events, so keep that in your back pocket. Be aware of the timing of everything. I mean, based on yesterday, there's no fear out there at all. Nobody. I was expecting more or less an oscillation day yesterday, but turned out to be a nice day. A lot of green up moves ahead of Powell, and I can only imagine what he's thinking. You know, you got a guy with a machine gun and nobody cares, right? So he keeps threatening to fire, and maybe he will, but the market is not really buying it so far. So, anyways, I think I forgot to mention, please run your player at 1.5x if you're new to the channel. I think you'll be pleased with that speed. So, US dollar stuck here at the top, definitely has a double top look with a little bit of bearish divergence. You see the PPO at this high was here, and now at this high, much lower level, and starting to flatten. What would negate all that, of course, is a breakout above 109, and that would straighten out this PPO from flattening and probably race up to the upside. So dollar is stuck. TLT had a reversal day, up 1.4% right here at the bottom of value. Notice you got a big volume over price profile here. We dipped below, and now we are coming back to back check the meat of that range. So it's going to be important. I would imagine there's going to be some bond volatility today after Powell. I think the real proof in the pudding will be, next week. Could we come up here, fill that gap, and reverse? Sure. That probably makes technical sense. Just, watch your stops if you're short on TLT. And, if you get the sense that this thing is reversing with some power, you should still be profitable. But, this would be a logical place for this to roll over at the bottom of the value range where it runs into trouble. We've had several new people at the sign up for the YouTube videos. I'd encourage you to take the next step and jump over in the show notes. There's a link there where you can register for all my content. It takes 15 or 20 seconds just to drop in your email. That way you'll get my stuff morning, noon, or night. And a couple of the new traders hit the trading room and were more or less asking, I've been struggling lately. Tell me everything you know about trading so I can start making money. That's a common question. I don't mean to denigrate that question. But one thing came up where, what are some good psychology books, trading psychology books that that you could recommend? a really good one is Trading in the Zone by Mark Douglas. Also, if you do a thorough search of YouTube, you will find a 4-part series, a lecture series by Mark Douglas online, where I think it's 4 sessions of about an hour. So there's a lot of meat there. And what he does is he grinds through trading in the zone and gives a lot of good examples in his own trading. And he was a pretty prominent trading coach in his day. He's since passed away, but there's some good meat on the bone there. That's very, very good book. You will find some other books that he wrote after this, and I found them to be more or less recycles of this one. That often happens with authors. You kind of get a formula, and then you keep cranking out that formula as long as it sells. But I think this is the best of what he had to offer, and then couple that with the 4-hour video presentation. You got a lot there to work with. Also, Brett Steenbarger is a pretty well-known trading coach, and he does a lot of actual trading himself. So very practical type knowledge. You'll see a lot of books by him. I think a good one to start with is The Daily Trading Coach. That real bite-sized type things that you can work on. And he's got a number of other ones. I think I've got all of them basically. They're all very, very good. But I'd start with The Daily Trading Coach. And then you've got the classic Reminiscences of a Stock Operator, which documents the trading life of Jesse Livermore, whose trading career was basically 1900 to 1940. Goes through his trials and tribulations. This one to me is almost like the Bible, from the standpoint of it's a short book. It's very easy to read. You read through it the first time as a incoming trader with not a lot of knowledge. You'll read through this book quickly, shrug your shoulders, and probably say what was the big deal about it. I really didn't get much practical knowledge about it. But then as you start trading, if you go back and reread this often, you'll start picking up a ton of nuances, mistakes that he has made, in his trading. And I read this one at least once a year, and I've been doing that for 20 years, and it never ceases to amaze me that I get something new out of it with each and every read through it. So I like that book. Like I said, you pick up the Bible, you're going to get something good out of it. Even though you may have read a passage a number of times, you go back and read it again, whether it's something you're dealing with, it has new meaning for you. So pick up that book. I think it's the best $10 you're ever going to spend investing in yourself if you want to be a trader. So enough about that. That'll get you going. And I will put up a little list of technical books that you can use to get started on a future video. And you're always welcome to reach out. I've got a whole shelf of books, and if you exhaust these, reach out and I'll give you other ones that you can look at. VIX, we had the tag of 25, 2 down days. We got a gap to fill. As we talked about yesterday, I'm not expecting this to go down to 18. probably come down and fill the gap. Might do that today, but then reverse higher. But yeah, so that's volatility. Not a lot happening in Bitcoin, just kind of oscillating. WTI oil made a little fake break above the 200 and then pulled back to the 8-day. You can see it here. I think getting over 95, getting over the 200 will, and if it can hold that, get oil moving to the upside. NYMO continues to bounce. Same thing with the NASDAQ oscillator. Overbought, oversold, bounce up to the middle. Moving on to SPY. We did have a nice technical event yesterday, and that was recapturing the the 200 EMA in gold and breaking back above this 415 level, which marked the top of this support zone between 415 and 410. Still got a gap to fill above. I think this is going to remain a focal point while it's nearby, because what's happened is, at least the way it looks to me so far, is a breakout and a successful defense of the back test, right? We came down. There was actually a gap in here. We filled that gap. I've since removed it, and now we're bouncing. So as long as it holds 415, there's not a lot to panic about. I mean, you can't have a big bear market without losing 415. So that's why I say don't get too far ahead of yourself in terms of, oh my God, you know, something bad is going to happen. As long as you're above 415, nothing bad can really happen, right? If it breaks and then we lose 410, then yeah, we got concerns at the forefront of a deeper correction. But right now, that hasn't happened, and you can see it here on the 60-minute chart. We are midway through this upper gap from 417.23 to 422. I dropped in a downtrend line off of these highs, and so now we're right at the intersection of that. So I think you can mark 419.51 as a mini pivot breakout level. If we get above 419.51, then odds on favorite price will move up and fill this gap here at 422.14. And of course, you've got 415 on the downside acting as support. Q's had a good day as well, 1.77%. Unlike SPY, though, Q's still have some work to do. We're in this resistance zone. We've got a downtrend line, and we've got the 200. So if this thing resolves bullishly, what you'll see is a breakout above the downtrend line and a recapture of the 200. And then that, to me, would be very bullish. You will have, broken out, come back, had a little undercut, but then quickly recovered the key technical areas on this bounce, and then the path would be cleared for a move higher. You can see that we're midway through this gap, and really breaking out of the gap above 322.86 should send this higher up to the next gap, and then you can focus on that one. IWM breakout, successful back test, came back to the downtrend line, came back to support, spent 3 days there, Bears could not break it, and now we bounced, filled this little gap, and now we are above the 200, above the downtrend line, and above support. So that looks good. The line here in black that's descending is the 200 simple moving average, and then that would be the next technical hurdle to cross. Get above that, fill these gaps, and then be on our way. And here it is on the 60-minute chart, well, you always get more information, but I think we broke back above this 194, which we were watching on the downside. You can see that that was a high volume over price bar, which could have acted as resistance, but now we're back above 194 with a path to 196, and then we've got these open gaps above. Meta had a good day yesterday, 3.38%. We had come up in the prior sessions for a touch. We pulled back, and then we filled the gap yesterday. So now you can use the top of the gap at 168 as your pivot. As long as it stays above, the door is open for a run back up to 172, and then that will be your big resistance, as we've been talking about for weeks. Resistance, 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 support, resistance, and now on its next run up to 172, if that materializes, that'll be a big, big level. And then above 172, that would be your kind of secure long above the trading range. So fake breakout, bull trap, fake breakout, bull trap, but then recovering it if it can get back above 172. Apple, we were talking about yesterday, 168 being a pivot point. It broke above that, came back for a little check, and now is up at the gap at 170. Small gap, maybe like $1.25 up to 171.25. But if you get that entry today at 170, I think be odds-on favorite to fill that gap, right? The PPO remains cautionary. Why? Still has not broken above the zero line. I think, a day or two of green will break that positive. You can see on RSI, it's already broken above 50, so that's a positive move. But as with any stock that you're trading, always be mindful, after you've gotten a break and you've lost PPO momentum down into the bearish range, let's say there's a negative reaction to Powell or really at any point in the future. If you see PPO flatten out at the zero line and roll over, that's a very bearish move. So be aware of that. We'll see what happens. Tesla had the 3-for-1 split, so now we've got all new levels. I think right here, 295 is your pivot for today. We had a fake move higher yesterday, then a big reversal, and then a strong final hour where it got back up to the pivot point. So I think above 295, bulls are fine. More cautionary below 295, and if it drops below, then your first target is going to be 287.50. Microsoft, big base down here at 275.75. Bears could not break it. Notice that aligns really, really well with our high volume over price bars. Still work to do. Really got to pop 280 to get some running room towards this big gap. You can see that above 280, that's where the large volume over price bars end, and then there's a step back. So 280 is definitely the place to watch for a breakout. And if you're interested in trading that, I would have that level alarmed. Amazon got the break above 134, 135, and now is working on this little gap. I would have 138 alarmed for a move higher. I think 138 is going to be your pivot. One thing you got to be, cognizant of is, a little quick move up to 138, fill the gap, and then turn down. So the profile looks a lot like what we just showed on Apple, where we lost positive momentum back here. We got into the bearish regime, and now PPO is coming up to the zero line for a big decision point. Of course, what you don't want to see is this flatten out and then roll over. Okay, Google. Nice day yesterday. We said 115 was a pivot. Notice that we had this value range back here. In fact, I've got it marked. So we went into value, found support at the high volume over price bar. It's amazing how that works. And now we've broken above that value range at 115, and that was the impetus for the move higher. Now you've got the top of the gap here at 117. I think if price can get through 117, then we can go on up to 118.50. I'll just show you that on the daily. That was our big line of resistance. So fake breakout, rejected it to 200, came back, found a base, and is now going to, I would assume, make a run at 118.50. And if it can get above that, then should have some power to go higher. And as we've been discussing over the last few days, when you see a stock, with a failed breakout, come back and then recapture that key level from below, that's a very bullish move, and you want to be long there at 118.50 on that breakout. Now, does that mean it's going to, go on up here? No, but from a technical trading standpoint, the elements would be there. It could come up here to the 200 and get rejected, but you still got to take that long at 118.50. If price recovers and holds it, closes above on a daily basis, you should be long there. And then your first target is going to be the 200, and your second target will be 126. And then that'll be a big decision point as well, because support, 126 will be a big level of resistance if price can go up that high. Netflix, we dropped down below. I think that was Monday. Came up, rejected at the top, at the bottom of the gap at 234. Pulled back a little. Now we're back at 234, and you've got a $6 gap up to 240. So that's going to be a key spot today. I would be trading around 234 A break above would be bullish. Any kind of rejection there, probably going to get a little pullback. SMH was a nice one yesterday. I happened to get this one, which was nice. We had a big $4 gap here. This first bar of the day did a little, let's see what the low was. Yeah, it opened right where it closed the day before, so that would have been right here at 228. And we knew that NVIDIA had a bad report, but they started buying it. And then we got the gap entry at 231 and really never looked back through the close. So now this 235.50 is an important level. You can see the reactions along that line. If it can break above 235.50, then I think you've got a path up to 239. So it's nice. It was nice to see semis participating in the green day for the Qs. I always like to see those being in sync together. And yesterday we got that gap fill move, which was nice. ARC-F broke above the high volume over price resistance. And so now, as long as it can stay above 118, or excuse me, 18.7, let's call it, the path is clear up to this gap at 19.2 that goes up to 19.7. So you've got a 50-cent gap there in ARC-F to play with. What you don't want to see is somehow this roll back over into this range. Then I think you'd come back towards 17.9, something like that, where this found support before. ARC-G got up to the critical level. I think 39 is your pivot point for today. If it can break above, you got some good running room with a gap to fill. If it gets rejected, I think you got first support at $1 lower at 38. ARC-K still has some work to do. There are a lot of transactions in this area, but I think 45.50 is your pivot with a gap to fill above. I'd be more cautious if there was a move higher and then it rolled back over below 45.50. That to me would be cautionary. And then wrapping up with ARC-W, notice our big value area here with the largest volume over price bar here. And we were able to take that out yesterday. So now, as long as it stays above 55, you've got a path to 56.50 and then possibly on up here to fill this $1.50 gap up to 59.50. And I think I don't think it's be some kind of revolutionary thing to say is that, coming out of Powell, if the market is not scared of whatever he has to say and you start seeing things bullishly resolved, like this would be a good, this along with the other ones that we've discussed would be good candidates for a long, because we've talked about, ARC names being the higher beta, the higher horsepower. And if you see, TLT rising and you see tech starting to take off, you can grab some ARC and possibly get a little more horsepower to the upside if everybody's going to go, gonzo, back to bull mode type action. And the converse of that, of course, is if there's a bearish reaction and this turns out to be a fake breakout and rolls over, just like we saw with this one here. It rolls over. ARC-G gets stopped right here at 39. So as you're starting the day, and as I'm sure everybody in their, I don't know if that's going to be televised or it's just going to be notes, but whatever. Have your matrix up on the screen of the key things that you want to look for. Maybe that's have one box be TLT, whatever mega cap tech that you want to trade up there. Maybe a couple of ARC names that you want to watch. I think you'll be able to tell, as the day unfolds, is it going to be a risk on day or is it going to be a risk off day? And I think that's all you're trying to figure out with Powell today. Does the market generally take it in a good way, or does he say something that spooks the market and they rip it the other way? One thing about these speeches, there's usually a transcript released right at the time, that he starts talking, and the algos read that in 100 milliseconds. They've read the whole thing. So expect some volatility, right at 10 o'clock as the algos read those notes and then see if a direction emerges. So just like on a Fed day, don't get wrapped up in a big pop or a big drop like right out of the box, because a lot of times it's fake. So kind of resist that urge of having your finger on the trigger at 10 o'clock and 1 second to try and grab that bar, because a lot of times that bar ends up being fake. And I think the best thing you can do today is come to the right conclusion of whether it is going to be risk on or risk off. And that may take several bars to propagate before you feel comfortable. Okay, now I'm going to take a position. I think that initial volatility has come out, and set your stop and then respect it, and don't get into wishing and hoping, that whole kind of thing. If you take a fast position and you get stopped out fast, and then give it more time to settle out, you may end up saying, well, I would have been right because it reversed and went back the way that I originally had it. But you can't take that chance. Just make another entry and see how that one goes. So I hope that helps a little bit. Kind of hard to tell, what's going to happen. I don't want to venture a guess. Yesterday, I thought was going to be, an oscillation day ahead of Powell, but they went risk on. So you got to be ready to change your view in a heartbeat if you want to capture some of these fast moves on an intraday basis. So let's leave it there. Hope you guys have a good day of trading. We'll see how it goes. If I have any market comments, I'll send them out, as I see them after Powell. So let's leave it there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.